Hey, what's going on, guys? It is Matt back with another video, this one on Skillz, ticker symbol SKLZ. Now, you may be wondering to yourself, Matt, Skillz has been covered by everybody, and not just in the last week, even though there's been a ton of videos in the last week, a lot of it great content, a lot of really good DD out there, but also some other folks that have been covering it for the last several months. So we've got Dead Inside, one of my favorite YouTubers who I love all those videos. Likewise, I love Tom Nash, Wall Street, and a few others out there. But Dead Inside has actually been covering Skillz for a couple months now. And he made two videos a couple months back, and then he made an update video a few days ago, actually, based on some news that was just hitting the market around the deal that the NFL has made with Skillz. So if you look at the ticker, you'll actually find that Skillz has had quite the run up. So I'm looking here at the last 6 months, and Skillz, back when it went public in mid-December, had run up to roughly a $20 price. It is over double that now, and it's 2 months later. And you can actually see a very, very large shoot up in price in the last week specifically, all the way up to nearly $44 from the high 20s a week ago. Is it too late? It's a very valid question. You may be seeing all of this information out there, all these people covering it, and it potentially getting a lot of hype based on this NFL deal, and also based on the fact that Kathy Woods with ARK Invest had gotten into Skillz as well, and they took a large position in this. However, I am going to attempt to answer that question the best that I can. As always, I'm not a financial advisor. Do your own research, and please make sure that this is just a supplement to your research and that you're not using this video solely for deciding whether or not you're going to invest in something. So with that, what do I think about Skillz? Well, just going into a little bit of a background in case that you are the 1 in 100 people that is maybe coming to this video without knowing anything about Skillz. Well, Skillz has a business model that I really like. It is more or less an app platform. I hope I described this correctly. You can basically download a Skillz app where on that app you can see a ton of different games that you can choose. Each one of those games is created by a developer. And the developer has created, let's say, solitaire or a bingo game or a Texas Hold'em style game or a 21 blackjack type game or even pool or bowling. There's a bunch of games on there. And when you choose one of these games to play, it is usually in the format of playing against other people. You can go head to head, you can enter tournaments, you can do a bracket. There's all different kinds of ways that these apps are set up to where you are playing a game and it takes the luck out of it 100%. It's basically like if I use solitaire, the deck is going to be shuffled the same way every time for everybody that is playing in that tournament. Or if you're doing just one-on-one head-to-head, both people will have the deck shuffled the same exact way and will have the cards come out the same exact way. Now, you can't see how the other person is playing those cards, but what it does is you get a score at the end of your round, and that score is ranked against the person you're going against. And then there's obviously a clear winner based on who played the deck better per the rules of the game. Now, how does Skillz make money on this? Well, Skillz is basically getting revenue from people spending money to play a game. You don't have to spend money. There is a free way to practice and hone your skills. However, once you feel comfortable, you can go in with as low as like a 25-cent entry, which you'll see in a little bit. And let's say you're going head to head with somebody and it's 25 cents and 25 cents, which makes the pot 50 cents. The winner is only going to get roughly 40 cents out of that. And so the remaining 10 cents, and this is just an example, the remaining 10 cents is what gets split by the developer of the game and by Skillz, the platform. All right, guys, so we're going to take a look at what the Skillz app looks like. So this is one of the games that you can get into. It's one of their actually 3
top games that make them about 80% of their revenue right now, and it's called Solitaire Cube. So just a quick overview, just so you can understand how this game makes money, how it works. You can basically play in tournaments. You can play against people. Don't look at the dollar values over on the left. Actually look at the entry values over on the right of each of those rectangular segments. So you can see at the top where it says Pearl, there's an entry fee of $2. The prizes are $600, but not necessarily for any one person. They're divided out. So the top person may be getting $20. The next 20 people may be getting $18, and so on all the way down to where you have a bunch of people getting $1. Now, you have bracket tournaments as well. You've got head-to-head, where you can see the one that's kind of pulsating the third row down. It actually says your entry fee is 25 cents and you can win 42 cents. So let's just play this, even though I am not good at solitaire, just so we can understand how this app makes money. So it's selecting some random person right now for me to play against, and now it's going to start a game of solitaire. So I'm just going to click play the game. So you can see I just finished the game and I was absolutely terrible. I don't really play solitaire, but the point is I spent 25 cents, as you can see down on the bottom left, and how much they won 42 cents. So just doing simple math there, you can see that if we both pay an entry fee of 25 cents, that means there was 50 cents collectively in the pot. Somebody won 42 cents, so that means 8 cents went to the house.
So inherently, you can see that Skillz didn't do anything. It was just a platform to host the game developed by somebody. So this is a great opportunity for developers out there to make games, to then capitalize by using the Skillz platform and to make great money if they have a great game to offer. And Skillz loves that. I love it. I love it because it's a recurring feedback loop. You have hopefully a great payout structure that gains traction. Developers want to come to your platform instead of other platforms, and I'm sure Skillz probably has some kind of agreement with the developers that they can't put this game on any kind of competitor's platform or something like that. I'm not sure about that, so verify that for yourself, but it only makes sense to me that Skillz would operate with some kind of exclusive agreement in place. That's just basic 101 business to me. But just how they make money, it makes so much sense. It follows the Roblox method. If you've been watching my videos on Roblox, you know that Roblox is more or less the same exact kind of platform. It hosts a platform for where developers come in and make a game using the Roblox software. So you can have some kind of ninja storyline Roblox game. You can have some kind of pet game where you collect pets and your pets level up in a Roblox, and you can choose all those different games and whichever one you want to download, and then you can spend money within the game, which then Roblox makes a share of and the developer makes a share of. It's the same exact thing, and I'm super bullish on Roblox. So naturally, of course, I'm going to be super bullish on Skillz. However, as always, there's always pros and cons to investing in any of these companies, right? So Matt, why would I not want to hop on this bandwagon and invest in Skillz right now? Well, I'm not saying you don't. I just want to put some seeds in the back of your mind to be wary of. So let's jump into the rest of the content. Going back to what I had up originally that I didn't touch on, Skillz originally was set to go public with FEAC, a SPAC, and they had a $3.5 billion valuation. Well, they went public back in December, so why am I touching on this now? Really, it's just to bring up the point on what their valuation was at the time. And it was based on a 6.3 times estimated multiplier of their 2022 revenue. And their revenue was estimated to be $555 million with a 57% CAGR from 2020. What does that mean? So right now, their revenue their guidance for 2020 is $225 million. They're projected to hit that. From the 3 months prior, they're definitely on track to hit that. Now, if we just assume $225 million in revenue, through 2020, if you apply a 57% growth through 2021 and then 57% growth through 2022, that's how you actually get 555 million. So their valuation, having a 6.3 time multiplier of that revenue, is what gives them that $3.5 billion valuation. Hopefully that makes sense to you guys out there. Nothing really necessarily else in this article that I really want to touch on. I just want to go straight to the financials. Let's take a look at what is it that is behind Skillz in the financial statement. What kind of information can we gather to help us make a better decision? Here on the investor page for Skillz, you'll actually see that in the third quarter of 2020, their revenue of 60 million was up 92% from their third quarter in 2019. If you look at revenue over the year, it is at 162 million through the 9 months, the first 9 months of 2020, which is up 91% over 2019. So roughly, they are projected to increase their revenue from 2019 to 2020 by over 90%. That's great. That is incredible growth. That is obviously a very, very bullish thing. Hopefully, the idea is that this growth will continue on and on and on as more people find out about it. I'm not gonna lie. One of the things that I did prior to making this video was just asking people around me, people that I know that play video games, have you ever heard of Skillz? And out of about 20 people that I asked, only one had heard of Skillz. So this is obviously very, very early with how much of the public knows. However, with the NFL making a deal with Skillz, and I just want to read this section real quick. This is obviously how the word gets out more to then generate more revenue and then generate more profit, right? So let's look at this article real quick. The NFL is partnering with Skillz, a mobile game developer, to host a global developer challenge. Participants will be asked to build an NFL-themed game using Skillz esports platform. The developer challenge will launch in the second quarter of this year, with the winning product set to receive joint marketing support from the NFL and Skillz. The new multi-year gaming agreement with Skillz come after the NFL announced an investment in Skillz in November 2019. They're looking to basically partner with Skillz in order to reach new and existing fans, as you can see down here. More or less, as you have more and more people playing mobile games, they want a way to reach a different demographic that is on mobile, as opposed to watching cable NFL games. How do you bring those kind of new fans in? So this is one of the ways that the NFL is looking to do that. At least that's how I read that statement. Now, the other thing I really get from this, that I'm trying to extract all the important information that I can, is that this deal with the NFL, you're not really going to see anything of substance revenue-wise come from this deal with the NFL for a little bit of time here. And that's because they had this developer challenge, so it's just a challenge for the developers to make a game starting in the second quarter of this year. With that, we have no idea how long this might take. So after they select a winner, maybe that's in the third quarter of 2021. This is just me guessing. And then by the time it actually gets implemented onto the Skillz platform and then pushed by NFL and Skillz, you might be talking anywhere from 9 months to a year from now. Again, completely guessing. But what I want you to understand is that when you're looking at this run-up, which this latest run-up in the last week can probably be attributed to this NFL announcement, you're not going to be seeing anything impact their financial statements from this NFL deal in the next month or two. It's going to be a while. And investing a year shouldn't be that long because, I know I like to make some swing trade moves here and there, but in reality, the best strategy is always to, dollar cost average over time, not really try to time the market. Don't do what I did with GameStop where I tried to time it and missed out on a ton of money, but just invest in the companies that you really believe in, that you really have some strong conviction in, and invest over time, because then you'll average out and you'll be a lot happier when you see those stocks that you have high conviction in rise over time, and make a lot more money than you would make in either a high yield savings account or just making pennies on every $1,000 in a traditional savings account. So going back to the point, We know about the NFL deal. We know that that is most likely the last reason for this run up. Going back to the financial statements, there is a lot of bullish statements down here in the third quarter financial highlights, right? Revenue grew, gross profits grew, gross margin went up, contribution grew. However, I want to highlight one thing here. Net loss was $42.9 million during the third quarter of 2020, compared with a net loss of $5 million during the comparable quarter in 2019. If you're reading through all of this, that may pop out to you. Like, whoa, they actually are not reporting a profit. Well, that shouldn't be too surprising if you're familiar with companies that are early on in their growth stage. Most of the time, they are money-losing companies because they need to grow. But we want to understand, why is it losing money? Is this something to be worried about? Well, let's keep going. We'll skip through all of this and we'll go straight to the financial statement. You'll actually see that what I highlighted over here, sales and marketing, was a massive expense in the third quarter of 2020. I spent $73 million on sales and marketing. That does not worry me. It doesn't worry me because when you go back to the SPAC, FEAC, and why Skillz was merging with a SPAC in the first place, was because the SPAC is trading a set amount of money. It was roughly $250 million, and that amount of money was openly discussed as going to be used for sales and marketing in order to get the word out. What I was mentioning before, when I was talking to people around me that play video games and whether they had heard this or not, the reason I was asking is because that is really what's going to make the difference. Skillz can only make money by people being on the platform, by driving more and more and more traffic. If they don't get traffic, they will fail. However, there is 90% growth year over year. So what happens if they keep on growing? Does the sales and marketing go down? Most likely, yes. That is the idea. They do want to be profitable, as do all the shareholders want the company to be profitable, right? And so naturally, as you get the word out and as you make incredible deals like with the NFL, I mean, that cannot be understated. That is one of the big things about this, is that the NFL is a way for Skillz to reach a lot more people. And with that probably being part of their strategy over the next year and any kind of hype that can happen between then, of course, there is going to be more and more and more buzz around this. You know, Kathy Woods being invested in this. So understanding that right now they are losing roughly $3 per share with how much they're spending on sales and marketing, up from 35 cents a share the third quarter in 2019. You know, it's actually, if you look at the whole year, it's actually $6.64 that they're losing per share for those first 9 months. And a lot of that really is attributable to sales and marketing. So if we keep going down, the last area I want to look at is kind of going through how are they trending with driving traffic to the website and to the apps. Because I am seeing a lot of people hone in on the fact that, you know, there was an article that said one of the biggest risks to Skillz is that roughly 80% of their revenue is driven from 3 games. Well, if you use the app, if you hopped on at all, you would know that there are tons of choices. If one of those games disappears, if a developer decides, you know what, there's another platform out there that is going to pay me more, there are so many more games on this platform, and that just gives more developers room to, all right, Solitaire left, I'm going to build Solitaire. I don't see an issue with that being backfilled. So I'm really not concerned about that at all. I don't share that concern that a lot of other people covering this may have. And then on top of that, I was doing some research into the competition for Skillz, and I found something called Cash Play. But I actually kind of need some help on this. So if any of you out there know about the competitors around Skillz, like I mentioned, heard about Cash Play, but Cash Play doesn't seem to exist anymore. I can't see anything past 2016 on where this app has, you know, stuck around. I see a lot of posts from 2013 to 2016 about Cash Play, more or less being the same thing as Skillz, but it just kind of fell off the face of the planet. The other one was Foozler, and that was a Canadian-based company, and kind of fell off the face of the planet. I really hope that doesn't happen to Skillz. I couldn't find anything on why those companies left. I mean, this may sound stupid to some of you out there that maybe know all about this. For all I know, maybe Skillz acquired these, but I couldn't find anything on it. So if you guys know of any companies that are direct competition to Skillz, please leave it in the comments. I would love to hear about it, because I really tried quite a bit to look into that to see where can developers take their apps and go make more money. Because to me, that is probably the biggest risk in this company, is if there's somebody else out there doing the same thing who's willing to pay more, take a smaller margin, and take all these games away. Because if the games leave, the app fails. But I'm not seeing anything out there, which is why my position on Skillz is still bullish and is kind of more solidified. Focusing back on this area, you'll see that monthly active users is up. Average revenue per user is pretty high, actually. That's very, very impressive numbers here. And the gross marketplace volume has been trending up. So, Matt, how are you playing this stock? As always, like I mentioned in the beginning, do your own research, guys, before you ever jump into a stock. However, I am a little hesitant. Well, not to be confusing, because Matt, you're so bullish. You saw all these things. Yes, I bought some Skillz back on, I think it was like maybe Thursday of last week. But I bought a very, very, very small position. Now, why would I say I'm hesitant? I'm not hesitant at getting in the stock. I'm hesitant because of this run-up based around the news on the NFL and Cathie Woods, and none of that really having anything to do with the financials right now. And this run-up just being so massive over this last week. I fully expect there to be a pullback in the next, maybe this week, maybe the following week, but I am really expecting there to be a pullback. However, I don't want to miss out on this stock potentially not pulling back and running through and continuing on its upward trajectory. And so if there is a pullback, I will just be that much more bullish and probably pile in with more shares. And I would have no problem getting in at a much lower price than $44. However, like I said, I'm not letting that keep me from getting in right now, because like I mentioned at the beginning of the video, you don't want to miss out on something because of $2 to $3 a share, right? Now, I'm not telling you if it drops $2 to $3 that that's a perfect entry point. I think there's probably going to be a much larger pullback than $2 to $3. But if I average over time, if I buy in and I hold long term, and I'm talking years, right? I'm talking many, many years. Cathie Woods, when they invest, they are minimum looking at 5-year time horizons. I just know that from covering genomics and many other things on ARK ETFs. They are not looking at the next month. They are not looking at the next week. They are not looking at the next year. They are looking at 5 years down the road. If they're in, they have a team of people that, spend hours and hours and hundreds of hours interviewing, talking to these people, understanding their financials, seeing the path forward. That, of course, is the confirmation bias that probably a lot of us are looking for. But if you're trying to trade this short term, I don't know that right now would be the time to get in. Now, I don't suggest short-term trading, even though I do it sometimes. I tend to lose more than I win. So take that with a grain of salt. But on long-term trading, you can't really go wrong once you find a company that you have some strong conviction in. Now, another thing that I want to put in the back of your mind for anybody out there that, also wants to hear any other kind of potential cons, right? Even though I am bullish, I am not going to glance over some of these other things that I'm seeing. At this current price, let's say there is no pullback. Let's say that it stays at $44 and starts to continue up. That is actually a little more worrisome for me. And that is only because when you're looking at that original $3.5 billion valuation and you take total shares outstanding and you multiply it by this price of the stock right now, you're talking about a nearly $13 billion valuation. That is almost 4 times what the valuation was at 2-3 months ago. Is it a $13 billion company right now? Absolutely not. No way. But that doesn't stop the fact that interest rates are low, liquidity is super high, and these ratios are kind of out of whack right now. Is that out of the norm is a multiplier, an extremely high multiplier of revenue out of the norm right now. No, there's a lot of companies out there that have extremely high multipliers that a lot of people can't justify. But it doesn't stop the stock from going up because of all the liquidity. So that is just something that I want to make sure is in the back of your mind, that you're not blindly buying into this and you're not YOLOing your life savings into it. I know we all want those magical tendies, but at the end of the day, we got to be smart about how we invest our money. And with this, I bought a very, 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 very small position. I mean, very, very small. I'm talking, and this is all relative, of course. What may be small for me may not be small for you. What may be small for me may be extremely small for you. I don't know your position, your financial position. However, me personally, a small position right now is 10 shares. I bought 10 shares last week, and I think it was at like 38 and change, so just under $39, something like that. And I believe that I am currently overpaying for that. But like I said, if there's a pullback and it drops and it hits the 30s, if it hits the 20s, that wouldn't really surprise me. Yeah, I would lose, let's see, I have 39 bucks. If it drops to $20 a share, that's $19 times 10. Yeah, I'd lose roughly 200 bucks. But remember, I'm not getting into something that I don't have conviction on. So I would just double down, buy more shares, because at that price, my conviction goes far higher. So just make sure you guys have a strategy. Make sure you guys are thinking through how you invest your money. That's really all I have for today, guys. And with that, I'll see you next time.